Hello, welcome to the weekly technical analysis review. I'm Selena Nicholas, technical analyst at XM.com. So today we'll look at some major pairs on the daily chart, starting with the euro against US dollar. So the odds for EURUSD strength has increased considerably, especially since breaking above the 200-day moving average. There was a strong opening this morning. The pair opened with a gap higher, and it's broken several key resistance levels, last week's high of 1.0825, and we also broke above 1.0828, the February high, and it's also broken the December high, 1.0873. So this all happened in one morning, and from here we have a daily closing above 1.09. It's currently testing this level. Then this would indicate that EURUSD has entered a bullish phase. In the short term, at least, this would strengthen the bullish bias, because the outlook for the medium term was quite neutral. We would target 1.10 next, and from here we'd look at further targets above at 112 and above, but the bullish bias would be negated if there's a fall below support at 1.07. From here the market would have retraced more than half of the recent rally from the lows of around 1.05, but the short-term bias remains bullish. Let's take a look at dollar yen. That has turned increasingly bearish in the short term, especially after breaking below the key 111 level. There are no signs of stabilization yet, so we could see prices fall below this key 110 level, especially if there's a daily close below it. Then we could say that dollar yen has entered a bearish phase. It was neutral in recent weeks since January, and there was a rally from the 100 level area to 118.66 in December before we saw that consolidation and just that neutral outlook. But if prices continue to fall below 110, deeper towards the 200-day, then this would shift the outlook to a more bearish one. But for now, RSI is quite close to oversold levels at 30, so we could see some consolidation for now. Looking at pound dollar now, we're still on the daily chart with a strong bullish momentum. For the short term, it's looking quite bullish, especially after rising above this key level 1.24 last week, and this was where the 50-day moving average lies as well. So we're at an important break from here, and we rose above the February high of 1.2570, which was acting as a resistance level. Next target is 1.2705, and that's another high from early February. If we look at RSI, it's supporting this bullish short-term view. It's rising. Now, only a break below 1.24, if we fall back below this level, it would start to shift the bias, this current short-term bias. And this is an important level since the 50-day moving average has been hovering around this level for some time now. It was keeping the medium-term outlook neutral since this moving average became horizontal. So medium-term outlook does remain neutral as long as prices remain below 1.27 and around 1.21. But the short-term outlook remains bullish. Let's quickly take a look at gold. You can see gold had a strong rally this morning as well. Prices at 4-week highs. We're testing a key barrier now. Key resistance at the 200-day moving average, around 1260. Important level. So that's now capping the upside momentum. But if we look at RSI. It's firmly bullish, so it's supporting further gains, although it could show that there could be some consolidation at current levels for the market around 1260, since the RSI is close to overbought levels. But if there is a successful close above the 200-day and above the high of 1263.74, that was reached end of February, then we could target the next key level at 1300. So the outlook it's neutral to bullish right now for gold. Thanks so much for watching and have a great day.